Welcome, everybody. Welcome to this really dynamic and interesting panel on the ins and outs of crypto for your PA being, of course, your personal account. My name is James DiBiasio. I'm your host today. I am founder of DigFin, which is a website covering all things digital finance, fintech, and digital assets. And also, I'm a newly minted co-author of a book called BlockCon, which is done in collaboration with Charles Dawsey of Consensus. We profiled 21 blockchain entrepreneurs in Hong Kong. So check that out. It's a lot of fun. Charles does breakfast and dim sum with everybody in town. Now, we're going to be talking about the crypto ins and outs for your PA. I just want to, before I introduce the panelists and the subject, I just want to make sure that we're all clear that this is an educational only discussion. No one here will be offering investment advice. And what we're saying to everyone is in the context and understanding that this would be relevant only for people that are professional investors in your various regulated jurisdictions. So just want to be clear about that. And within that context, I think we can have a seriously fun and interesting discussion. Welcome, and let me introduce the folks that are going to be telling you all about the ins and outs of crypto today. So first, we have James Quinn. James is managing director of Q9 Capital here in Hong Kong, where I'm also based. Q9 is a service providing private wealth in digital assets. So welcome, James. Great to have you today.
Thanks, Jim.
Then we have Paul Ridley. Paul is with Nomura, which is one of the more progressive licensed financial institutions. They've been very early to try to provide frameworks for blockchain finance. I'm sure he can tell you a little bit more, but he is Chief Administration Officer for the Wholesale Digital Office at Nomura. So welcome, Paul.
Thank you.
Lucy Gazmaranian is a former consultant with PwC, where she helped people, institutions, and technology companies find their way through the crypto world. Now she is founder of Token Bay Capital, her own venture capital business looking at opportunities in the blockchain space. So welcome, Lucy.
Thank you, James.
And last but not least, Dan Burke, who is joining us from Singapore. Dan is the Asia Pacific Managing Director for Sales at BitGo, which is one of the leading institutional digital asset custody, trading, and finance platforms. So it's great to have you join us, Dan.
Thanks, James.
Okay, so we have gotten those introductions out of the way. I've invited the audience to submit some questions when you are of a mind to do so. We're going to talk about how to think about this space, which is accelerating so fast. You know, when we first put this idea together, you know, it didn't even occur to me to talk about, say, meme stonks or meme coins. And we're seeing so much froth and activity across the crypto world. And at the same time, we're also seeing governments advancing central bank digital currencies and so on. Corporations are advancing stable coins. So the world is getting broader by the day. And so investing in this space used to just be kind of about Bitcoin, and now it's about a lot more. So James, maybe you can tell us a little bit about how you see the investment landscape changing. Bitcoin's still kind of the king, I guess, when it comes to market cap and provability. You know, it's been around the longest. It's the daddy. It's the OG.
Yeah.
What do you see going on in terms of when you're talking to clients or prospects? You know, is it just about Bitcoin, or are they looking at other things?
Yeah, so I mean, we like to say that our clients are, you know, more or less the Bitcoin class of 2021. So sophisticated individuals, you know, corporate clients who may be new to crypto, maybe new to digital assets, but they, you know, they know something about investing. And we expected them to, you know, when they're making their first allocation, a large part of that, if not all of that, is often in Bitcoin. And that is usually the case, but what we've been surprised at is how quickly they move with their interest and how quickly that broadens out into some of the other cryptocurrencies, and not just the ones that are large, famous, and been around a while, like ETH or Ethereum, for example, which they do obviously travel in pretty easily and pretty regularly, and not just like the older altcoins like an EOS or an LTC or Litecoin, but DeFi. Like, hey guys, what do you have in DeFi? And this is somebody who's maybe made their first crypto investment like 2 weeks earlier. So that it's very much in the public consciousness. Once they've sort of crossed the bridge and started making their first investment and see how actually easy it is to do, they get comfortable very fast and they start doing their own research, right? And they start figuring out what these coins are, and they're requesting from us. Like, one of the things we've had to do on the platform was quickly expand our offering in terms of spot trading, just to accommodate the interest in all these other coins. So, it's still kind of the majors, if you will, is going to form a core part of people's portfolio. Bitcoin, you're right, I think being the most important part of that, of course, ETH as well. But yeah, both old alts and especially, I think, DeFi, meme coins, Dogecoin, for example, also. But, I think everyone acknowledges the kind of more pure speculative nature of those, as opposed to a lot of people think there's a lot of great things going on in DeFi, and whether the investor has an interest just from a purely speculative point of view, or actually has spent some time researching the different platforms and how, the value behind them, just depends on the individual or company that's getting involved.
Yeah, I'd like to contrast that. You're a bespoke digital wealth platform for the crypto space, for the digital asset world. Paul Ridley from Nomura, maybe you can give us a sense of, from a licensed financial institution, one of the world's majors, where has your journey gone in terms of what the clients are asking you about and what you're able to do for them?
Yeah, sure. So, our kind of journey at Nomura through and into digital assets started with regulation, really before thinking about what actual cryptocurrencies would be most in demand for our clients. I mean, and that really for our clients starts with custody. So we started out in 2018 to build a digital asset custodian that would be capable of handling Bitcoin and any other regulated asset that could possibly be of interest to our clients. So far, we've seen most of the interest in the conversations that we've had in Bitcoin, but it's much earlier days probably for institutional type investors in this space than it is for the kind of more progressive end of the high net worth and kind of private wealth segment, who have probably been in this for a couple of years. Maybe this is their second cycle. And it doesn't surprise me what James said earlier, that they're probably leading the way here and looking at the other coins. With that said, everyone's heard of Ethereum, and there are probably another 2 or 3 other assets that would be household names even amongst kind of our institutional client base, but we're not seeing a lot of investment there yet.
Okay. Dan, with BitGo, how are you sort of expanding, I guess, the product set, and how quickly can you keep up with the changes going on in terms of what clients are asking about?
Yeah, I mean, so for me, we're watching 3 themes, I think, right now. The first being that Bitcoin and Ethereum have reached pretty large market caps. And so a lot of people are asking, like, what they're demanding to do more with their Bitcoin and Ethereum. So you see a lot of companies rapidly trying to build out all of these offerings. You start with borrowing and lending, but now we're starting to see people demand more sophisticated structured products, which are creating pretty large yield opportunities. So one of the things we like to say is, if you're allocating to Bitcoin and Ethereum, you get the upside of a growing asset class. But now you're seeing some interesting opportunities for additional yield on top of the growing asset class. The second thing I would say is that DeFi, it hit mainstream probably about a year ago, DeFi summer last summer, and looks a little bit similar to the ICO boom in 2017. But actually, it's pretty different. A lot of these platforms and companies have real cash flows. They have large treasuries. And something else important is that these teams have built up substantial social capital, which is a very interesting thing you need to evaluate in this space. Some of these teams and companies and investors can't really afford for something to go wrong in one of these protocols. The third would be, Ethereum. A lot of people are complaining about gas and fees to use Ethereum. It's kind of become unusable in the short term. And so you see a lot of opportunistic people out there setting up competing chains. So we're getting asked a lot about, Binance Smart Chain, Solana, Avalanche, Polkadot. It's kind of interesting to work out intellectually what you think about that. Their bullish investment case is that ETH is so popular that they have a better way to do it. But the investment case resting on that ETH is too popular is going to be one that we have to see if it plays out. Just the last thing I'll add is, at BitGo, we're involved in DeFi. We launched a product called WBTC, and you can see, people are actually demanding to do more with their Bitcoin. They've put $10 billion into WBTC, which allows them to actually get an Ethereum token, which represents the Bitcoin. And they're putting this into DeFi protocols to earn additional yield on their Bitcoin.
Okay, there's a lot to unpack there. We're going to come back to some of these themes. Before we do, Lucy, now that you're an investor in businesses, what do you see as what's interesting right now in the blockchain world? Where do you think you and your peers are going to be going to next?
I think the whole space, it's just a land of opportunity, right? How you want to slice out the whole digital asset and blockchain landscape. There's innovation happening at a really rapid rate in lots of different verticals under that broad umbrella, right? So if you want to talk about the infrastructure layer, which are the blockchain protocols, identity management, oracles, but then you've got now it's becoming quite distinct, the different sort of verticals, if you like, coming off that, with financial services, so opportunities in what's now being termed CeFi. Then you've got DeFi that we've just been discussing a little bit, which is of a very different nature, but is as much innovation happening there. NFTs obviously has captured the imagination of everyone recently, and that's sort of being viewed, if you like, as its own sub-asset class in this new ecosystem. And finally, what I think is lagging and possibly going to be really, really impactful, the social tokens, right? So the e-commerce and social media platforms and how a token is going to integrate within these business models. So, long story short, there's a common thread, I would say, that ties them all together, but each have very distinct movements and groups of users at this point in time.
Okay, great. I'm going to stay with you for a minute here, Lucy, since you were the last person to get asked. I'm going to pick on you now. We have a question from the audience, and so that's great, and we welcome more, so keep them coming. So here's the question. It's a pretty reasonable question. With so many cryptocurrencies now available, and being that it seems to this person that, as they say, it's nothing other than speculation driven by typical emotional buy-sell decisions, and you can agree or dispute with that. What does the panel say that would help participants understand that there is or will be in the future something more tangible attached to these assets? So I think another way to put that is sometimes in the crypto world, it seems very circular, that you're just trading one speculative coin for another speculative coin. Where does it tie in where in traditional finance, anything, you're based on, there's a revenue stream, there's an income stream from a business. And I know Dan referred to this, but Lucy, I promised I'd pick on you, so I will. As a VC, do you see business models that are sort of beginning to tie in these sort of more real world applications into digital assets?
Yeah, listen, I think there needs to be a broad appreciation that we're very early, right, to this sort of token cycle, if you like, and how all these different coins and what role they're going to play in a very diversified token economy. I think with a question like that, you almost need to sort of differentiate between the different tokens there are out there, right? Because different tokens have different use cases. And I think there's a misconception that all tokens are cryptocurrencies, and there's a confusion there. Yes, all tokens can theoretically be used as cryptocurrencies, but some are more suitably, tailored for that purpose. So, you need to look at what each token, the underlying ecosystem and the users of that token and that decentralized network, and see what business they're creating. It's all about user adoption at the end of the day. And, if it brings enough people in and everybody in that ecosystem is incentivized to participate on some level in that decentralized network, then there's a case to say that it's going to be one of the success stories, right? As with anything, it's the customer base that you can attract, and we've seen that with the big internet giants, right? Facebook, Google, Instagram, all these applications. It's about attracting in users, and so that's exactly what's happening with this decentralized ecosystems, and the token represents your participation, if you like, in that network.
Yeah. Okay. Thank you. A follow-on question, which I think sort of relates to something that Dan was talking about. Dan, you're talking about some of the issues around the cost, the frictions of using Ethereum right now, the gas charges, and how this is leading to others to perhaps try to piggyback and find their own chains. My question is a little bit different. My question is, Ethereum has been moving very slowly towards a proof of stake mechanism, Ethereum 2.0 or 3.0, I don't know what 0 we're on. Is that going to have an impact on the investment case? Do you see that that's going to bring any kind of significant change to the marketplace?
Yeah, I think we're still about 9 months away from Ethereum 2.0, but I think two interesting things may happen. The first will be that it's supposed to make it more scalable, which I think will make it a continued investment case for these decentralized applications. The second one is that if they pull off the staking aspect of it, it's going to turn it into a cash flow asset. So there's kind of two schools of thoughts right now I see battling in the crypto space when people try to value these things. One is something like Bitcoin against something like gold, or the size of the stock market, or the size of the real estate market. The other one is based on cash flows, where you can do, discounted cash flow model or something like that. And so I think that this Ethereum moving to 2.0 will continue to keep that debate going and turn it into a cash flow positive asset.
If you're an investor, what's the most important thing that you need to think about?
I think cash flows. I think what I look at in DeFi is these platforms. The reason they're generating cash flows is because they have some sort of network effect. They have liquidity. They have people using it. So there are a couple of sites I'm happy to share with people in the show notes or something like that, where they can kind of follow along this stuff. But liquidity begets liquidity. And so I think there are going to be some big winners in this space. And what's great about this particular industry is that investors, if they do their own research, they do their homework, they can participate in the upside as well.
Yeah, I mean, James, I'd like to actually point back to something that Dan mentioned earlier, saying comparing the ICO boom of a couple of years ago with DeFi now, and saying that these are very different. And they are. And, to simplify it a bit, I'd say like the ICO boom was, hey, give us money. Look what we're going to build. This is what we're going to build. Give me some money. And DeFi is, look what we built. Look what we have, put your money on the platform and make some money. And each of these, more successful DeFi projects has a way for people to make money. Like, they're lending out their coins to other folks. They're posting things as collateral. They can become insurers, like insurance consortium run in a decentralized manner. It's very interesting, right? So there's actual practical use cases, and folks are making money on those right away. Some of that is speculative, right? Because they're making it and they're staking it in the coins that are actually going up in value as well, but they're making yields in addition to that. So I think that they're already proving to be somewhat of money-making models out there in these decentralized platforms. And ETH, that value will accrue to ETH if it remains the protocol of choice, or one of the main protocols of choice for folks to keep building on top of it, right? And so I think that's what ETH2 is all about, like kind of keeping pole position, if you will, in my view.
Okay, great. There's a cool comment on the chat. We've got a flowing chat going here alongside our conversation from people in the audience, and someone said, totally right, James. It's about not having it's about having an MVP, a minimum viable product first, not just a white paper. So thanks for the comments. We're totally fine.
Hey, James, I'm really sorry to interrupt. Can I address the question that came to Lucy? I think there's some important stuff that happened recently that I just think is will help with like the whole speculative nature stuff. I really do think the whole Coinbase IPO was a really important milestone for the industry. I think it's going to be fascinating to watch this company have to put out quarterly reports and explain their business to the analysts and the institutional investors that are now allocating capital to Coinbase. And I think they're going to have to actually start to look to prove things, that there's more stuff going on than speculation. I'll also point out, I made a couple notes here. Silvergate and Signature are, regulated banks that are now doing Bitcoin-backed loans. So I think you're actually starting to see some real-world applications for some of this stuff.
Yeah, I'd on top of that comment about Coinbase having to make quarterly reports, the same is also going to be true of the folks behind Tether with their DOJ settlement. There's obviously been, we can talk about this. There's been a lot of question marks about Tether. Some people in the industry seem happy with the way that's been resolved, but now we're going to have to also see some transparency in the the world's most leading stablecoin. So we'll see how that also plays out. Just a quick note to the audience. I'm totally fine if you want to ask us questions through the chat. I'm monitoring that as well. If you say something that's worth repeating, I'm happy to do so. If you want to send me a slightly more structured formal question for the panelists, do it through the Q&A section, but either one is good. We're happy to have people engaging either way. Question for you, Paul. When we talk about things like Ethereum 2.0, or just I guess the prospect of a fork in a chain, something that changes the nature of the network. How do you at Nomura kind of think about that? I mean, does that create issues from the institutional side when you've got these potential changes in the core protocol?
Yeah, that actually comes up more than I would have thought in industry conversations. I mean, ultimately, at the end of the day, all of these digital assets are technologies, right? And the fact of the matter is that technology can't stand still. And one of the biggest threats to Bitcoin, for example, is that something else comes along and replaces it, not that the concept of digital blockchain-based money is no longer going to be in favor. So we see forks, we see new token upgrades, Ethereum 2.0, 3.0, 4.0. Is all inevitable kind of developments that are going to have meaningful impacts on the prices of the assets that investors are considering owning today. So that all needs to be factored in. It's something that is certainly adding usability and functionality to these different assets, which of course will drive adoption. So it's all good. It just makes the due diligence around investment choices much more difficult. And frankly, we've touched on so many different topics today already. And as Lucy pointed out, it's no longer the case that one person can have a good grasp of the entire crypto landscape anymore. It's just too huge and too technical. And so one of the real challenges that we have when trying to figure out how to think about this space is how to develop a really well-rounded position in an industry that's so early. And I'm sure that everyone else on this panel and a lot of people in the audience are trying to make sense of that too.
Yeah, and maybe could you just share with us? I mean, how, from your perspective, are you guys trying to figure out how to frame that? How do you think about priorities?
For us, it's all about Bitcoin still, and it's so early that if we were to establish ourselves as an authority on Bitcoin, then that would keep many multiple the teams that we have on this now busy for years. So it's early enough that we haven't had to go there, but we will.
Okay. And I want to hold, while I have you, Paul, there's a question come up, which I'd like to get different answers from this. It's an important question. It's not necessarily the most fun question, but it's important. And I'd like to ask a kind of a bank first, which is around, the question is, how do you view the risk concern about negative environmental impact of Bitcoin? Could this slow adoption? Could it lead to different policy outcomes that could be a problem for investors? So maybe Paul, since you must have some sort of ESG framework where you work, perhaps you can, and I'm sure some of the other panelists have a view on that.
Yeah, we do. And this is really one of the major concerns with our ever increasing activity in Bitcoin in particular, which is a particularly energy intensive asset to produce. I guess the one thing that I would point out is that the electricity usage and the environmental impact of that to mine Bitcoin is probably slightly overstated. And by that, I mean that the proportion of energy from renewable sources that's used for Bitcoin is much higher than people think. Everyone has different data points on this, but maybe as high as 60% of the energy put into Bitcoin mining is from renewables. There are more sophisticated theories around why that's okay. But I would just say, before putting a blanket, lens over Bitcoin that says, well, it's uses as much energy as Ireland or whatever. I would encourage everyone to kind of double click into that a little bit and learn more about the energy sources and what kind of energy is being used, whether that energy could have been used for something else or not, before kind of just writing it off as a polluting asset. Okay.
James, is that something that you deal with as well at Q9?
I heard just the other day, actually, some interesting data, basically, talking about, well, how much does it cost to produce fiat? How much does it cost to literally print money, to the entire system of transferring value electronically between every counterparty that transfers $1 billion from point A to B from the moment that money's printed all the way till it gets to person B? And then, in this particular study, it was actually saying it's more than it would cost to produce Bitcoin and do the same transfer. So don't forget that you're not comparing it to zero, because when you're transferring the value in crypto, you're not doing it in some other way. So you have to subtract what you would have been doing in fiat case or passing it, right? And then I can only echo what Paul said, which is basically like all the miners are incentivized to keep energy costs as low as possible. So as long as the regulation is around to sort of, for all people who use energy, like to talk about the public costs, right? The externalities in it, that Bitcoin, like miners are going to be, or any miners, outside of Bitcoin and just any crypto that has mining, are going to be as incentivized as possible to make sure they spend their money and be as energy efficient as possible. So again, I think you're comparing it to what's already done in fiat. I think a digital bearer asset like Bitcoin or any of the other cryptocurrencies is actually more efficient in a lot of ways. So you have to compare it holistically. And at least according to this study, it actually ends up being cheaper. So.
Okay. All right. Thanks. We have another question. We have quite a few questions from the audience, which is great. Keep them coming, fellows. So this question is about the STOs. I haven't even used the term STO, securities token offering, and we haven't really. Maybe it's been eclipsed by other things going on. But is the securitized token, creating like a synthetic mirror of a stock or a bond or some other asset, a building? Is that still a hot topic? Is this still something that's going to be happening? Maybe Lucy, you can tell us if you're seeing this in the companies that you're taking a look at. And you're on mute.
We've all been waiting for the year that STOs really take off and we get lots of liquidity in secondary markets, and it hasn't happened yet. But it hasn't happened for a good reason, because we're still in building phase, right? In Hong Kong, it's also a very regulated space because you're dealing with securities, right? So this is tokenizing existing financial securities, which is extremely heavily regulated. So it's just more players that have to come together and agree on what boxes need to be ticked, right, in order for them to be unleashed first on professional investors and then as a second phase to retail investors. So in Hong Kong, we've given out the first license to OSL, type 1 and type 7. So really trying to build a regulatory framework around digital assets. But I'd say there's two aspects to security tokens. There's the sort of tokenizing what we know and love, so stocks and bonds, and then the new frontier of security tokens, which is, tokenizing Tesla, right? So we've recently seen a big crypto exchange, introducing more fractionalizing stocks to an even greater degree. And really becoming quite innovative in how we present traditional securities, making them more accessible, have dividends paid far more efficiently, voting rights automated, etc. on a blockchain. So that's all the really exciting new frontier, but also tokenizing new securities, right? Tokenizing illiquid assets like real estate, tokenizing art, where are NFTs and security tokens going to meet as we start to potentially tokenize NFTs? And, effectively with security tokens, there are the stocks and bonds aspect, but then there's the aspect of tokenizing anything you want and creating a new financial product. And, we need to tread carefully with that.
Yeah. Okay. Very good. Well said. Thank you. We have a question about volatility. Obviously, all of these in the coin side, they've been tremendously volatile. Bitcoin famously, meme coins like Dogecoin especially. I guess this person's asking, can you comment on this volatility? And essentially, if more institutions are coming into the space, does that mean less volatility in the future, or is it still going to be a pretty crazy thing? And maybe Dan, you can talk about this, and James can follow up. And maybe you could also talk about the impact of futures trading on these markets. In classical finance, futures trading is usually a stabilizer. But we're seeing all kinds of crypto derivatives being traded, but I'm not sure we're seeing, I don't know, are they helping? Would it be even more crazy if we didn't have the derivatives market that we have now, or less? Dan, you want to tackle this issue?
Yeah, sure. I'll comment first. So I think the volatility actually is an important feature right now. I think, it took us 12 years to get the banks to start writing research reports on Bitcoin. And while some of them do entertain it by putting price targets and stuff inside the research reports, when I read these, a lot of times they say it's probably a good portfolio diversification because of its volatility. So I think that right now it's an important aspect of the asset. Once it gets to a point where it's not very volatile, then maybe the banks start saying it's maybe a less portion of your portfolio, or they're not even really interested in it anymore.
Okay, but we're probably still a ways away from that being the case.
Yeah, I think so.
Yeah. Okay. And Paul, from an institutional point of view, are the institutions that you're talking with, are they very hungry for this volatility? Do they see it as a great diversifier out of conventional securities, or is it a concern for them?
Yeah, so I guess at a high level, I'd say volatility is going down in Bitcoin, at least over time, as institutions are coming in. And so that question kind of may already be proving itself to be true. With that said, volatility is still high by any measure. And I'd say, yeah, a lot of hedge funds are getting into Bitcoin because it is volatile. And if you're a sophisticated trader or market maker, you want to trade something that moves. And Bitcoin and other digital assets definitely move. But it really depends on who you are. And if you're a high net worth individual or a family office, that volatility may be a negative. If you're just wanting to buy and hold longer.
I'd say squarely, it's not a negative from our investors' perspective and for our clients' perspective. It's a feature, not a bug. The volatility comes just as much from the upside moves as it comes from the downside moves. And I think that's not lost on people getting into the space. If sized appropriately, I think it can work well in people's portfolios, or at least, that's the feedback. They're happy to have that volatility. And then there's correlation as well. It's not, it's sort of saying, oh, it's uncorrelated or it's negatively correlated, depending on what you're looking at. Those may or may not be true, but it's not obviously correlated to anything that they're currently trading, in traditional markets or, in equities or any of the mainstream investments that they're doing. And that helps as well. Yeah. So
on that correlation question, James, what about within the digital asset space? We're seeing things like Dogecoin rocket for reasons that may or may not have anything to do with anything that an analyst can read on a spreadsheet about.
Right.
I guess, for some people, these are amazing trading opportunities, but are we seeing, do we still have a sense that Bitcoin kind of leads the pack and everything kind of trails in its wake, or is that really outdated now, and we have a multiplicity of vectors?
I don't know that it's, okay. So maybe you have a multiplicity of vectors, but they're all pointing roughly in the same direction.
Okay.
Yes, others can lead. A meme coin can lead one day and Bitcoin can lead another. And sometimes people are rotating into riskier assets, if you will. And sometimes they're rotating into safer assets within crypto. But frankly, that's not new. You saw that in 17 and 18, that existed as well, but there's more choices now. there's more, there's more protocols, there's more tokens, there's more coins, there's more cryptocurrencies, there's just more choices. And it's more in the mainstream. I think one thing about volatility is people going, wow, this volatility is crazy. Well, like, you should have seen it a few years ago, but you just weren't looking then.
Right.
So I think that's part of the factor as well.
Yeah. Okay, great. We have a pair of interesting questions. Lucy, I'm gonna test your mettle. I think you can perhaps channel your former life as a consultant for this one. What's your view of the Chinese government changing its position on cryptos? Now it's gone from a ban to acknowledging that it might be a legitimate alternative investment. What do you think is going on there? What do you think that might mean for this space?
Yeah, I mean, I think the changing narrative associated with any crypto, right, is super interesting. It's like crypto goes through so many different lives and so many iterations because it's so new and we're all trying to assign a role to it, right? How is it going to play a role in our economy? How's it going to play a role in our portfolios or in society? Is it going to be the downfall of governments and nation states? I mean, the range of arguments, right, or discussion points that are attached to different cryptocurrencies are just incredible. That's what makes the space actually very exciting. So it actually, for me, comes as no surprise that the PBOC has also evolved its view, right, on Bitcoin in particular. And they came out and very clearly said, when they came out with their digital yuan project, they said it is in direct response to the threat of Bitcoin because Bitcoin took off so fast, and particularly in China, right? So they took steps in 2013 to stop financial institutions transacting Bitcoin. Then in 2017, they closed down the cryptocurrency exchanges and cracked down on all these ICOs. And then in 2018, they also, really tried to sort of stop the miners, the Bitcoin miners. They stopped short of making it illegal to actually hold Bitcoin. I think there's an appreciation that it's actually quite a phenomenal new asset, right? Which actually inspired their new digital currency. That underlying technology is very efficient and very effective. And if anybody's going to appreciate that you can't get rid of Bitcoin, it would be China. So I think we've come to a really nice inflection point in history, actually, where we're all getting much more comfortable with the digital gold narrative for Bitcoin, as opposed to maybe as a payment instrument in its early days. And they're now feeling comfortable enough to sort of give a nod to it as this type of digital asset, they said, as distinct from a digital currency. So therefore, it would not be competing with the sovereign currency, and they're just about to roll that out. So it's actually very encouraging.
It does sort of raise the bigger question, and this isn't just China specific. Can digital private cryptocurrencies play in the same sandbox as central bank digital currencies?
For me, the answer is resounding yes. I think that's the core of innovation of crypto. I don't think you can put that genie back in the bottle. The role of a token or private crypto as part of business models, as we decentralize everything around us, including corporations, that token is going to be our entry card to that ecosystem. So for me, they have to coexist, right, with digital currencies, private coins, and that's the way our portfolios are going to look. That's the way we're going to operate in a digital economy. Okay, thank you. We're still getting some more questions from the audience. I want to prioritize those because we're here to serve you guys. This is about illicit criminal activity, which impacts I guess you could say, the fungibility of a token. So if a Bitcoin or another coin is associated through chain analysis or something with something negative, something illegal, that can impact the price of holding that token. So perhaps Paul, since you're from the institutional world, this might be something a little bit more relevant for you. How do you think about is there a way to sort of make the stain come off of these tokens? Is this something that institutions want? Because we do know that they'll pay a premium for newly minted Bitcoin.
Yeah, to be honest, this was a concept that I was hearing a lot more about a year or two ago, before some of the kind of blockchain intelligence and KYC AML company tools were widely used. And I'm referring to kind of chain analysis and the like, who are actually these days very, very good at identifying digital assets that have been used for illicit activity versus those that haven't. And it really, it's not much of a conversation anymore, at least in my world. And I'll go so far as to say that I've never once been offered virgin Bitcoin. I've never heard of anyone buying it. And even though in theory, of course it exists, I just don't see it in the market. I'm actually really interested in whether anyone else on the panel has ever heard of it actually transacting, and at what sort of premium.
Yeah, anybody have an anecdote?
I do. I probably shouldn't. Maybe I shouldn't divulge. Anyway, a country,
yes, you should.
A country I won't name reached out to me exactly to position themselves as the minter of virgin Bitcoin, because they believed there was going to be a significant demand for this. And the particular nation state that I was speaking to, actually, it fit very well with the profile of the country. So I think there is definitely demand for that country to be looking into being a provider of those types of Bitcoin assets. But how scalable that is, how many virgin Bitcoins can there be, right? I don't know. And what does that do to the circulation of Bitcoin? So I'm not sure that's gonna really take off.
Yeah. Okay. Great. Thank you. I want to spend a little time talking about helping people access some of these different stories. Professional investors might be already involved, so we can talk a little bit about maybe just first steps. Several of you have referenced the idea that you got to go do your research. Maybe you can talk about what are credible and understandable sources of that research. And then how to get started, and then maybe a little later on what we can talk about for those people that are already knee deep in this stuff. Any further tips? So James, would you like to maybe talk about sort of getting involved on in terms of the first steps?
Sure. I mean, there's lots of choices now, right? Some people go the exchange route, which there's a lot of great exchange offerings out there for people to trade. It's very self-service route, though, if you will. You're on your own, but there is opportunities for folks who are very active in that space. But that space has largely been dominated by very active crypto traders, and now kind of new retail is in there as well. There are platforms like ours, which kind of combine a fully electronic platform with some level of personal service. Like everybody gets a relationship manager who's on a Q9. So if you want somebody to sort of help guide you through those first steps, whether it's onboarding, which has become at all the different platforms a relatively simple process, even with the best, most robust AML, because that's fully electronic, and go on and start your first trades, or look to where to put your first investments, or just what are other people doing. There's plenty of choices out there. And in terms of research, well, I mean, there's the largest institutions. Banks are coming out with research papers that are actually worth reading now as relates to cryptocurrency. There's a lot of the crypto native sites, very popular ones that people go to, like CoinGecko, where they just follow price action and things like that, and that's become the most popular, like, as opposed to, say, CoinMarketCap, which is sort of the leader in that same space a couple of years ago. And so I think it's actually just about focusing, if you will, on a couple opportunities. Pick a platform, pick a couple first investment ideas, and that's probably just buying some spot on something, and deciding what that is, right? And getting involved and keeping it simple. I think a lot of people are intimidated, like, hey, is this whole atmosphere just completely different than what I know from traditional finance? Some of the back end is different, but a lot of the front end, a lot of the experience for people is actually becoming more and more similar to the world they know in terms of their, current broker dealer relationship or banking relationship, if you will. And so there's more familiarity, and in each platform will have their different nuances of who they're serving, and find out what's right for you. So it's kind of the who, the what, and then the how, which is sort of what we walk our clients through.
Great. And maybe Dan, you could talk a little bit about how do people get onto services such as BitGo, and what's like the next level that people go if they're looking for something a little more involved than just a spot or a few trades.
Yeah, definitely. Let me speak a little more general. We typically don't deal with retail. We're more of a back end for institutions, but I do think this particular topic is currently kind of the hottest debate in crypto. I think one size doesn't fit all. So I like to speak from experience instead of kind of tell me what you're going to do, show me what you've done type of thing. I buy stuff like GBTC because it's super easy. You can buy it through an existing brokerage relationship because a lot of the hard stuff is outsourced. The custody, the auditing, the tax. They even help walk you through like, beneficiary information. I can even lend my GBTC through my Fidelity account. And I know there's some up and coming funds in Hong Kong and in Singapore which are trying to replicate what GBTC does. Separately, I think everyone exploring or researching this space absolutely owes it to themselves to engage directly with these protocols as a learning experience. This is the first asset in the world that you can actually ask the person you buy it from to send it directly to you, right? You don't buy Tesla from your broker and ask them to send you the Tesla shares. So my second recommendation is, sign up for a platform like Q9 if you're in Hong Kong. Buy it, ask James to send it to you, learn your way around hardware wallet, software wallet, sign up for a few lending platforms, dabble with DeFi, and I'm pretty confident your curiosity will take it from there.
Great. Yeah, so I thought it was important, since we're talking about the ins and outs for the PA, that we have a little bit of felt for those who might need it. While I've got you, Dan, I've got a question from the audience, which goes back to some of your original comments about new chains coming up to compete with Ethereum. So this person wants to know, what's your thought of Polkadot, and there's others that you listed, Solana and so on, replacing Ethereum as underlying infrastructure to build use cases and services on. So maybe you could just tell us a little bit more about what you see going.
Yeah, I will keep it very generic. We're getting lots of demand for institutions, exchanges, asset managers to support these coins. I think they see them as a very valid investment thesis and investment case. The bet you are making, essentially, in my opinion, is that Ethereum is going to lose market share and one of these other ones is going to gain market share. I am not sure. Again, I don't know, but I'm not sure two chains that do the same thing can actually coexist. So the bet you're making, I think, when you dabble into other things outside of Ethereum, is that one will, in fact, replace the other. And that's where the returns or the appreciation might come from.
So in other words, it's almost like you're doing what Lucy's doing in a personal capacity, right? You're almost like doing research into these networks and deciding where you're going to place your bets. Lucy, do you have a view on that?
Yeah, I mean, I think that's exactly what you're doing. But I'd say, diversify your bets, because I personally think it's impossible at this point to really pick the winners, even a handful of winners, because we just don't know. I mean, the pace of innovation is so fast, right? It's incredible how quickly and how dynamic the space is. So I think Ethereum is looking really solid. I mean, that's definitely got first mover advantage. They've by far got the most active developers on that blockchain. But listen, different blockchains do different things. And so you can buy into different use cases for different blockchains. I personally see quite a diversified blockchain infrastructure, if you like. So let's see what happens. But anybody that says they know that they can pick the winner today, I don't know. I'm curious to hear from them.
Yeah. Please put that into chat. If anybody's got some investment tips, we'll but of course in this panel we can't give investment advice. Actually, Lucy, there's another question which you sort of answered this earlier. I don't want you to spend too much time on it, but there was a question, so I feel like we should answer it, which was around the regulatory frameworks for tokenizing assets. You addressed this earlier in a discussion, but very quickly, anything that we should be watching out for.
Yeah, I mean, the regulators have definitely done a great job. And I know the audience might be surprised with that, but actually they've kept up pace, right, with something that is so fast moving that people in this crypto space can't even keep up with it, right? So, there has been progress. I think if I'm going to point to any particular regulatory framework, bearing in mind that only 5% of regulators around the world do not have a dedicated crypto asset team. So they're all working on this. They realize the importance of this asset class and the role it's going to play in our future. But, here in Hong Kong, I guess a recent discussion point is, whether platforms are going to be able to service retail investors, right? And particularly when it comes to cryptocurrencies like Bitcoin and Ether. And, there's a really vibrant discussion happening as to whether that's a sensible thing, because you want to strike the right balance with regulation. You want to protect investors, but you don't want to stifle innovation, and you don't want to actually disadvantage a group of investors from what could be a phenomenal opportunity, which quite frankly, this crypto space is shaping up to be.
Great, thank you. I'm amazed that maybe it's my own fault. We've gone almost the hour and we've never used the word NFT. We haven't talked not in the context of the NFT craze, the Beeple art and all this stuff. So James, are you getting queries on this? Is this considered a real kind of investable thing, or is it something that's more a hobby?
Less so than say DeFi, less so than some of the alternative protocols that we've just been talking about. I think the reason is because our guys view us as we're a platform for investing or for trading or for borrowing land or different products that we're coming out with. And NFTs are certainly, they've become very speculative in certain cases, but there's also sort of a collection, collectors and people looking at it. So they're a little bit more bespoke in name, whereas not any particular NFT is having that brand name unless there's a story like you mentioned, Beeple or something in specifically around that. So less so. But people do, as sort of a side conversation are like, whoa, did you see that? Or and people fall pretty squarely on, that is just absolutely insane. Or, hey guys, this is the future. And their opinions aren't necessarily that close to each other. So there's plenty to talk about, but less actual investment interest from our clients, I would say.
We've got a question from the audience. What's your take on centralized versus decentralized exchanges? And I think that's in the context of increasing regulation. Paul, would you perhaps like to talk about that?
Yeah, sure. I don't know that I have a sort of great answer on which one is going to win. I mean, they both exist for different reasons. Centralized exchanges obviously historically have been easy to regulate, easy to monitor. From a compliance perspective, you can always have a good sense of who your counterparty is and high confidence that your trade is going to settle, when you think it will. So there's definitely there's some reason for centralized exchanges to exist in the digital asset space as well. With that said, the idea of cutting out the middleman is not unique to crypto. When we get to a place in the digital asset space where decentralized exchanges are incredibly reliable, everyone has faith in the algorithms that sit behind them, then they will absolutely be a viable way to trade not just crypto, but other securities as well, I would think. So it's early days. Crypto's leading the way, but I think there are going to be more and more conversations about why centralized exchanges need to exist, and over time, I wouldn't be surprised if DEXs start to eat into the centralized business.
Yeah, I just recorded an interview with my co-author Charles Dawsey, and he was talking about from consensus point of view, he's talking to more and more banks about what he calls institutionalized DeFi. Very early days, still quite speculative, but I think it's a DeFi framework that sort of marries, I guess, like maybe an enterprise DLT kind of club where you've got sort of known participants and there's some sort of wall, around the gates where there's a KYC and AML process, but then inside is driven by DeFi style technology. So I guess that's a watch this space for that stuff.
Yeah, absolutely. And let's be honest, in the traditional markets, the vast majority of trades are facing algorithms anyway, already, right? The difference is that the algos sit on banks or market makers' servers.
Right.
Kind of in a decentralized world.
I'll add a little bit there. I think the importance of centralized exchanges are particularly around the off-ramp and on-ramp. So like the fiat related stuff. So I think they'll always have a place in the market as long as people need to convert fiat into crypto. I think where it starts to get extremely interesting, and this might close the loop on something we spoke about earlier with CBDCs also coexisting with crypto and sovereign currencies and stuff like that. I think where it could get really interesting, you have companies like PayPal and Square. Square is mobile only. They don't even have a website that you can go to. You can buy Bitcoin there, do peer-to-peer transfers. I think what could get really interesting is if the PayPals and the Squares actually invest and develop some decentralized applications. They, in effect, could be your mobile wallet that you're walking around with, and you could send from Square, PayPal into these decentralized platforms, do whatever financial products you need. They may even participate, send whatever your profit is back or whatever you're trying to do back into PayPal and Square. And then they off ramp to you into the local sovereign currency or the CBDC. I think that's an interesting area to watch. And then I see James Love in the chat. I think an area I'm also very excited about and watching is I think somebody like Robinhood, BlockFi, Square is really close to actually collateralizing crypto to buy equity shares. So I think more to James's point, you're going to see this marriage of probably more traditional markets in crypto very soon, because I think the fintechs need to wade further into crypto, but also the other side, crypto actually needs to start wading into other financial services and other financial products.
Okay, that's a great way to, I think that's a great way to conclude things, but I want to give today's co-host and sponsor, James Quinn, the last word. We're about out of time. I'd like to thank the audience for these tremendous questions. The interest in this subject is very clear. We've had some cool stuff going on in the chat. We've had great quality questions, so thank you for that. And also thank you to our panelists, Lucy Gasmararian from Token Bay Capital, Paul Ridley from Nomura, Dan Burke from BitGo, and finally James Quinn. Final words on people that are have either coming into this space as newbies or maybe a little more veteran. What do you want to leave them with?
It's so much easier than you think to get started, and the first step is just crossing the line and reaching out to somebody like us or wherever you're going and getting started. Just get your foot through the door. And I'm so impressed by the level of engagement of everyone on in the Q&A side from the audience. And that's what we find, like our clients turn from hey, how's this work, to massive engagement, right? And then they help us. So the space has moved so quickly, it's going to continue to. So the most important step is to just get involved. And no matter what your first baby step is, you're going to take a lot more pretty quickly after that.
Great. Well, with that, I'm going to close today's session. Thank you, everyone. And from DigFin, I'm James DiBiasio. Have a great day and good luck with the trading of the crypto. Okay, guys, have a great day. Thanks.
Thank you.
Thanks, James.